even I would say like 6-7 years ago, our debt levels keep rising. We have one of the highest debt levels in the G7 countries. So for interest rates to be this high now compared to like 10 years ago, that's a big problem. What's going on, everyone? I thought we should cover some of the craziness that's been happening in the Ontario real estate market with all the interest rate hikes and kind of the micro cycles we've been dealing with the past year, because it seems like every 3 months we're in a different cycle. I wanted to just give it some context, kind of look at what we're dealing with at the moment and what might possibly be happening in the future. Obviously, I'm looking at this based on data. I've been looking at some market trends, and just as a real estate agent, things I see on the ground level with offers, just little micro trends within my market of Hamilton, Ontario, and obviously the Greater Toronto area as well. So I just wanted to cover this stuff. So just to get some context with the background, obviously we saw the craziest changes happening last year, 2022, in July to September, because we had the two big 0.75 and a full point rate hikes happen. And at that point, the markets really just slowed down. Like throughout Greater Toronto area, in Hamilton, we saw prices drop like by 20% in some cases. And it was just a crazy time because a lot of properties were sitting on market for a long period of time. We went from seeing properties sell in 7 days to going over 30 days. Right? And it was just not normal and people weren't ready for it. So from then until I would say end of 2022, beginning of 2023, we didn't really see much changes. There was points where things really slowed down. Like I would say the December 2022 market was by far the slowest. It had like the lowest numbers in terms of numbers of sales. Average days to sell was the highest in like the last 5 years or so. So things were really crazy. Now, that whole market cycle, it brought some opportunities for some buyers. So that whole period of time, like that December, November, January, February, it was a really scary time. On the ground level, I can tell you, like a lot of investors were scared. There's people with properties sitting on the market. Some people got really good deals, like some of the buyers that were scooping out these deals. Like I remember I had a client, we were able to get a property like 75, 50K under market value at that time. And then literally like we go into March of 2023 and the market just starts changing, right? We started seeing multiple offers. So we notice a change, and then you look at the stats and then the market's up like 5 to 10% depending on the area and the properties. So this obviously happened across the Greater Toronto area. So it just kind of started lining up with around the time that the rate pause was announced at the beginning of 2023, all the way to the summer, we just saw a crazy market again. What's really interesting about it is that we were probably at like peak interest levels. So you got to remember, compared to even 10 years ago, even I would say like 6-7 years ago, our debt levels keep rising. We have one of the highest debt levels in the G7 countries. So for interest rates to be this high now compared to like 10 years ago, that's a big problem. But for some reason, we saw a lot of people buying, and it's just due to the basic supply demand issues. So I saw properties going in like multiple offers for like 50K over asking. There were still some deals. It wasn't as crazy as that 2022 peak or even 2021, but this like spring market of 2023 has been crazy. So now you fast forward to the summer, June, July, and now we're in August. We really saw a turn happen in June. So as soon as that first rate hike happened, I saw properties sitting on the market for a little bit longer. Obviously, spring is the busiest season of the market, but summer usually isn't that slow, right? Like I've looked at stats, usually April, May, June are pretty solid. July is okay. And then, the slowest months are probably like November, December. But obviously that wasn't the case the last couple of years, but it was interesting to see. So as soon as they announced the rates, so they did a 0.25 rate hike in June and then another one in July, we saw things really slow down. So there's properties that were holding offers and then they weren't getting any offers. There's properties that were sitting fairly priced on the market for like 30 days, and then they were selling for 25 to 50K under. And now we're in August, and it seems like we slowed down even a little bit more. But one thing to keep in mind during all these times is, even in the slowest market in December 2022, even in January 2023, anything that was a deal, and I don't mean like something that was just like priced to entice you, but something that was actually like you knew it was gonna sell for a really solid price because it was priced well and the agent was just very transparent and they needed to sell. They were getting multiple offers and they were getting a lot of attention. Not that they were like selling for way over expected sale price or expected fair market value, but they're getting a lot of attention. And that continues to exist even right now. So whenever a property comes up that it's very clear, and from conversations with agents that, you know, they're transparent, they're like, hey, look, we're gonna price this fairly. This is kind of what we're expecting. We know it's a deal. And you know, if you're a local expert and you know your market, you know what a deal is. Those deals, they tend to go in multiple offers, and sometimes they get a little bit more than you would expect them to get, but it's always a deal. So anything that's especially like entry level, like in Hamilton, for example, stuff that's like between 400 to 600K is like entry level. And it's fairly priced, like you're not getting like sold like a shitty property and you're paying more than needed to, but you're getting like a deal, they'll go right away. Even in the slowest markets, we saw that happening, even at the end of last year. So that's still gonna continue. Now, going forward, I think what's really gonna happen, what we're gonna see is, if there's another rate hike, or there's indication of more rate hikes, or there's bad news, because we're very sensitive to news from what I've noticed, we will probably see that same winter slowdown as last year, because we're not ready for any more rate hikes. Like honestly, people are tapped out. And like I said, the properties that do really sell very fast and very quick are the affordable ones. And that's for good reason, because people's buying power is way down. And the winter months, people don't really move around a lot anyways. So you combine those two things with there being fear in the market, and you know, you might just see a really scary winter. But just like last year, now we do have some precedent, because prior to last year, for like the last decade, we never saw this sort of stuff happen where the market dropped like that. It was just dead, flat market. But now we have last year to kind of reflect on. So I would say, I think we're gonna follow a similar trend where even last year we saw this like summer slowdown, continued into October, and then November, it just really started to slow down. December, it was dead. Same with January, and then it started to pick up right before the spring. Now, obviously, I don't have a crystal ball, so it also comes down to what the Bank of Canada indicates and what their policies are going to be going forward. And kind of, I guess, the word that they put out into the media, because it's clear that people do react to that, right? Maybe their part of it is seasonality, but I really do think that if we see another rate hike, then you got to remember, whenever there's a rate hike, that means there's a longer extended period of time after that for rate cuts to happen, because you can't cut rates right after you raise them. You have to wait and see the effects. So if there's a rate hike in, let's say like December, that means for at least another couple months, there's no way they're cutting rates, right? At least like 6 months, because they need to assess the effects of the rate hike. So you got to be really careful with this stuff, obviously, depending on the type of business strategy you're following. Like if you're going to be doing flips or anything like that that's more active, then you got to run your numbers really well and pay attention to the market really closely. But just know that there's deals to be had during those times too. Like some of the best deals I found clients and that I saw go on the market happened during those times. Like I saw someone pick up a property, put 60K into it, and they made 100K net on a flip. And it was considered a good deal even for the lowest point in the market, because it was one of those deals. It was entry level, priced well, they needed to sell, and it just went. So you'll find those type of deals at those times. So if you have cash, cash is king during those times. So just take advantage, but just pay attention to the market. I don't think we'll be here forever, and there will obviously be some rate cuts down the line. We just don't know how far down the line we're talking, because it could be until 2025. right? But yeah, just pay attention, and I'll try to keep everyone updated on this stuff and kind of what I see on the ground level as an agent and someone who's actually offering and investing in real estate as well. So just stay tuned. I'll leave my info down below so you guys can contact me there. And I've also attached the Hamilton Investment Guide. It's completely free. So feel free to download it and, definitely reach out to me if you have any questions regarding the Hamilton, Ontario market.